So an article in the Wall Street Journal yesterday says that the Fed and two other federal regulatory agencies are moving toward would be a significant lessening of the nearly 20% mandate for big banks on capital, right? In part because of pressure from Jamie Dimon and other big bank CEOs. I want to bring in UBS's U.S. large cap bank analyst, Erika Najarian. And Erika, listen, we've heard Jay Powell say at these FOMC gatherings that, or at least hint that, listen, that the cap was the rules were unfavorable, and so we kind of felt maybe like something like this was going to happen anyway. What are the big banks looking for? What are they arguing for? What's an acceptable level for them?
The acceptable level for the big banks is what's going to be accessible in terms of access to credit for consumers and businesses in the United States. So, just to boil it down in very simple terms, what the regulators did back in July of 2023 is take finalized international standards, and as a response to a regional bank crisis that had nothing to do with capital and everything to do with liquidity, they essentially said, let's take those international standards and make them so much harder. Right. And I think at the end of the day, when you're essentially saying to banks, you have to hold more capital, if you want to lend to consumers, you have to hold more capital if you have to lend to businesses, then that could have very adverse outcomes in terms of access to credit. And a lot of the banks have also said, look, if Basel III Endgame had not been revised, and you heard that from JP Morgan's Investor Day today, then the burden will also be on the end user, which are consumers and businesses, because the banks would just have to charge more fees and, potentially approve less customers or, charge a higher interest rate in order to make up for that regulation. So I really think that the ideal outcome for the banks is what is an ideal outcome for U.S. consumers, which is remaining access to credit.
Yeah, I mean, we want banks to lend money. It's like, I understand the idea of you're cooking and these exotic things they come up with from time to time, but we want banks to lend money. Also, big news last week with the CFPB, massive U.S. Supreme Court victory, and it looks like it's a go, right? And again, this is one of these agencies that's got potentially a huge appetite. Now, we know what they're going for initially, some of the low-hanging fruit stuff, but could this eventually pose an issue or a problem for big banks?
Look, I think at the end of the day, a lot of the large banks don't do what would fall under predatory lending, right? I mean, everybody, to your point earlier, Charles, sort of got rid of anything too exotic after the global financial crisis. That was really the big cleanup period for the biggest U.S. banks. But I think at the end of the day, if regulatory agencies, including but not exclusive to the CFPB, continue to, essentially just to hammer down on ways that banks can make money, then unfortunately that tends to, again, I want to stress, hurt the end user, which is the consumer. So for example, if you cap late fees, that's fine. That seems optically great for the consumer at, $8 an incidence. But then, to your earlier point, I think we talked about this many shows ago, that could be a disincentive for the consumer to pay on time. And additionally, they may get hammered with a higher interest rate. So who wins? It's certainly not going to be the consumer.
Yeah, I mean, I've tried to channel this to Elizabeth Warren more than once, but it hasn't worked. I got less than 30 seconds ago. We've seen a little bit of a bifurcation. These big banks have taken off. They look pretty good. Regional banks still indecisive. Your thoughts there?
Look, I think, I'll tell you something. I think the regional banks are starting to look interesting here. So it seems like if we do have a soft landing, and again, net interest margins may not be, terrific until the Fed starts cutting rates. You had the UMB Financial and Heartland deal announced, quote, election futures market are, pricing in potentially a Republican victory. I think not having exposure to regionals, especially the high quality regionals, might be tough if you don't, if you think about what's setting up in terms of positive catalysts.
All right. Well, when you say it, I listen. So I'm going to watch them a little closer, maybe stick a toe in the water. We'll see. Erika, great seeing you. Thanks so much.
Thank you.